Hey guys, welcome to this week's episode of Crypto with Pav, with me, Pav, lead market analyst at Swyftx. And today we're going to do what we always do, talk about where the markets are right now, where I sort of see them sitting and how it's sort of playing out. You know, last week we spoke about how there was a potential setup for a bullish and bearish move. The bullish one would have been, I guess, a little bit more interesting. You could argue the downside says the same, but, you know, for altcoins specifically, we were teeing up a couple of factors that if the overall Bitcoin market held up its strength, you know, we didn't see too many outrageous moves or signs of weakness that we could be setting up for a major altcoin run. In my opinion, that's really shifted now. And we'll go through in this video exactly why that's the case. And a lot of it has to come down to Q1 historic returns, which we've covered in previous videos, so I won't really touch on that too much today. But the big one to sort of show you guys is the monthly close that we had leading into February. I know it's the 6th now, but it's our first video for Feb. And that was a big one, and I'll share exactly why soon. And then the next thing for me as well, we just in the short term haven't really been making too many structurally positive moves. And it's just an overwhelming sentiment shift as well from the macro perspective. So we're going to tie in what's happening, you know, in China as well as in the US with the recent interest rate announcement and US Treasury FOMC chair Jerome Powell appearing on 60 Minutes as well last night. So that's all sort of ties together, and we'll make that hopefully easy enough to follow. But, you know, let's just dive right in and sort of get cracking. So this is Bitcoin as we're sort of seeing it at the moment. You know, we've been tracking this range for quite some time now. So quite simply, just to talk through what we have here, we have a channel where we had a previous high, first low it made, and we're just looking for deviations. So we saw a deviation here, and that was the ETF release up the top there, to which we had that subsequent sell-off that we've sort of been living through, I guess, in more recent times. But this reclaim of this channel had a lot of people thinking, cool, well, you know, there is still a chance for a bullish move, but it really, really involves getting above these highs. So putting in a structurally higher high. So we didn't really do that in a very convincing way. To be quite honest, we did probably one of the worst things we could have done, and that is just poke above it and close back under. So, you know, you hear that commonly referred to as a swing failure pattern. A sweep is kind of how I just like to refer to it. So, you know, price moving, trying to put in a higher price, but there's just simply not enough bidders there to pick it up and take it. So a lot of people left, you know, at the party there. So imagine there's lots of trapped longs potentially up here as well. So as price does start to slide away, if we do start to slide away, they'll be in more and more pain and be likely forcing out of their positions. And even in the most recent, it was literally yesterday, we did see price track back up to these highs. And again, this is from the way I read the markets, a clear sign of sentiment. So, you know, we did manage to come back close to these areas. And if you were long and you're wanting to exit, you have to sell your position. So to see a exhaustion wick like this here and failing to close even above this line in the sand here, to me tells me that anyone that was long took the opportunity to probably shut out that position. Because again, if you're long or have a open position, you have to sell in order to get out of that position. So you're putting more, I guess, downward pressure on that market. So that's kind of what's got me concerned, I guess, to put it in a nutshell. And to sort of reiterate a point I was touching on earlier, the monthly close. So monthly closes are actually really, really important. I can talk you through exactly why. So what we want to look at with monthly levels is very simply just highs and lows. So we can see here at the start of this September range move, we did see a dip below the June low before in September we had a range of consolidation, before we had expansion and a move to the upside. And the same thing happened on the way down here. We had a previous high in which we failed to move higher then, put quite simply. So these often offer great areas to look for reversals as long as all of the other stars, I guess, of course, are aligning. But in this situation, we've got to sweep to the upside into what I would argue is pretty key resistance. We have an order block here, a monthly level as well. And if you would dare say, like to look at it, Fibonacci level as well. So there's 618 smack bang there as well, where we saw price turnaround. So for me, this looks as a pretty high confluent area for a potential reversal to brew. And it really ties into the narrative that we talked about in the past as well. Q1 returns for Bitcoin, not so spectacular. We do often see quite a bit of chop, bit of up, bit of down. I mean, that's pretty much what we've seen this whole year. And, you know, we can even look at things like Bitcoin flows to see if that's going to potentially change the narrative. I know we've mentioned before, and, you know, you've seen it obviously potentially across your socials as well already. You know, the GBTC products being hot on the sell trigger. Most sessions, well, most notably since the 26th of Jan, we have seen net flows actually be positive. So we've probably had more positive than negative days when it does come to Bitcoin flows. So for me, it's interesting that even with this positive sentiment shift sort of brewing across the ETF market, we're not seeing a real structural shift on lower time frames. And that's kind of what's got me concerned, to be honest. You know, when I did see this potential support range that could have try to hold here, it did manage to get above it, but only just to close back later, soon after. And then as well, just this sort of sweep here, how we talked about as well, and revisiting it. So there are enough reasons for me to think, okay, we're not looking to crash hot. I still think there's a chance that we could go higher here, and we just have to wait and give it time to see if we do. But if I were to say prices going higher is on the cards, I mean, I would be looking just for this general area as a area to watch for where price might go. So even this potential candle here. So, you know, we could even end up at 46K still. I'm not saying that's not possible, but for me, it's becoming less and less probable when we put in exhaustive daily candles like this, where we keep failing to put in, I guess, significant highs. That's almost like that rolling over effect that we've seen pretty frequently in the markets as well. And sort of what I can tie this back to, again, from a more macro perspective as well. I've seen China again in the news with their real estate issues, insolvency issues there. Their stock market's down massively in the last 2 years, almost to the tune of 50% across their top 1,000s index, the CSI. But I mean, there's a couple of cool restrictions you can read about here. Imagine if this was Australia. You know, some new restrictions that they're looking to apply to domestic trading and foreign investors, limiting investors' ability to short Hong Kong stocks. Investors are told they're not allowed to sell their position. Quant funds being completely banned from placing selling orders, and other quant funds banned from cutting leverage positions. So they're pretty drastic measures, you could say. Can't say I've probably seen that too frequently in my time, at least. But, you know, while this might sound like the world's over, I mean, you got to be pretty reasoned and sound-headed. I mean, these are not metrics that are, I guess, you know, being hit or unknown to the people at the top that sort of run the country. So for me, it's about watching from here and seeing how the government there plays this one. I would still like to see this one, I guess, play out for the next couple of weeks, but I wouldn't be surprised if we start to see the bottom start to form around this sort of area. You know, from a TA perspective, we're at prior lows after a big impulse down. So, you know, and obviously if they can't sell anything, that's obviously going to change the way things move as well. So we'll have to just watch someone play out. But obviously their risk on markets hate unknowing, the fear and unknowing. It really does not bode too well for price appreciation. So even if this doesn't in itself affect the liquidity, just investors and traders just taking a step back is probably the best thing I could say there, just from a sentiment perspective. What we also saw this week was US Fed Chair Jerome Powell speak just yesterday, and this was in response to the most recent FOMC meeting. So in an interview conducted by 60 Minutes, there was a lot of good, a lot of bad sort of points raised about, you know, what everyone wants to know is when interest rates coming down. And the rhetoric now, it seems, from the Fed is it's data led. So that's pretty good for us in a sense that we know where the Fed stands. So as soon as they start to see job numbers, inflation, jobs, inflation, and just growth in general, GDP, start to move in the direction they want to see it move, that's probably when we can probably be certain that the rate drops will come. So far, the potential point for a rate drop was March. That's been put at a very low probability now, with all the attention moving to the May meeting. So with everyone expecting rate drops in May, that may also adjust their risk tolerance between now and then as well. So that's like another reason just to sort of hold, I guess, for the time being, potentially people moving into a bit more risk adverse sort of playbook. Another thing I want to touch on as well is the US dollar index. So crypto markets, they are obviously priced in USD, USDT, as you might be aware. That's how the global liquidity is run for the time being, at least. And for that valuation, and we talk Bitcoin's at 40K, 50K, it's obviously very reliant on what's the underlying value of the US dollar. So what this basically is, it shows US dollar index seasonality. So seasonality being how does price generally move over a course of a year. And this is taking 20 years worth of data, developing some sort of average. So while it's not exactly a line in the sand of where we're going to be going and an absolute footprint we're going to follow, it does show that Q1, along with the data we showed in the previous video, Q1 generally does see a rise in the US dollar index, which is generally bad for crypto prices. You're fighting harder to hold that baseline value in the primary asset, which is Bitcoin or whatever crypto you're wanting value in USD. So this lines up quite nicely as well with the Bitcoin halving, which we're pegging to see in April. So this is just time. We've got to give it time to see if this trend is what we're going to see. To sort of point out where we sit now in terms of yearly gains in the DXY, we're sitting at about 3%. So it's about 3 times what you would expect in this period. But again, these are averages. So whether or not the market's going to respond to data like this, whether or not it's looking at it and say, okay, we're overstretched from the mean of where we usually are, we might potentially see the US dollar cool off. Or this more plays to a pattern of seasonality where price generally moves into the end of February, at least, with the US dollar continuing being on an uptrend trajectory. So sort of map that out on a chart. We'll just jump on a weekly here, and we can see this is the US dollar. This was the highs that we put in August and October 2022. And for, I guess, the most recent period, we've just seen a pretty much downtrend, right? Like that's been pretty much consolidating to the downside and sideways most of this year, back into last year. So this is a period that we're just coming out of, and we're suggesting for the next few months, we could be going to the upside. So, I mean, if we just look to map this out, even using something simple like Fibonacci, it's not unreasonable to think if you subscribe to this way of measuring the market that there is room to the upside still as well. Another way to measure it too is, something like range analysis. So we could take this high, we could take this low, and there's still potentially a move to this midpoint as well. We've had this deviation. So while we may or may not get a deviation on this side, I would be betting that we're at least moving to this mid-range here, just from a technical perspective as well. And then from here, we wait and see if we get one of these ones or one of these ones. So we can sort of meet that sort of juncture when we come to it and see how the market is responding, how it's behaving, and sort of make a call from there. But that, in a nutshell, I guess, is why I'm seeing strength in the US dollar, rising uncertainty across the macro landscape, a push for reliance on data before any good news can be dealt to allow the markets to really run. And all in all, we're seeing price fail to make higher highs on a lower time frame, as well as failing at a pretty key significant monthly level. So, as much as I'd like to be bullish now, like we did talk about the potential scenario where we do just hold here and we could start to grind and hold and move higher, it does seem there's a lot of odds stacked against Bitcoin and the crypto market and just on risk assets in general at the moment. So from here, you're looking at general areas for price to move. We can look mainly at these lows here, seeing subsequent lows like this here often areas of high liquidity. So this is where if you do get a move, it could be quite thin. Something like that is possible. But at the same time, there's nothing stopping the market just going very slowly down here, holding for a few months before going higher as well. Very much a potential scenario. And this is a thing we don't know until it happens. So the best thing we do, play it level to level. So the next region of interest will be down here if we do get down to it. Oops. And it, yeah, definitely comes down to what happens next from there. So if we can hold here or if we are going lower. The one thing I would point out is we have been going sideways for about 7 to 9 days now. It's actually moving on to 9 days. So similar to rubber band, you pull it, the further you pull it, the bigger the reaction. That's effectively what we could see here. Liquidity pooling to both the up and downside before a violent move and the direction is chosen for the market. So just want to call out too, as much as we could be going lower, if there's lots of liquidity above and below, you could see a move higher before a move lower as well. That's completely a normal move to see as well. But other than that, I thought we could move on to some altcoins as well, just to see how they're shaping up. Have a look at some of the more popular ones in recent times. So obviously we want to check out ETH, and we're looking at Bitcoin. I mean, if I had to say anything, that's looking probably a little bit better than Bitcoin, but I fail to see a situation where Ethereum could go higher if Bitcoin goes lower. So again, that situation where something unexpected happens from here, or where Bitcoin doesn't really lose its floor too hard and we do stabilize maybe at the previous lows, but we just hang there for quite some time, we could still see altcoins like Ethereum then start to still move higher. But from what I'm seeing here at the moment, it doesn't look too strong, looking quite anemic as well at times. It's still probably a bit too early to say, but let's see what that looks like on a weekly time frame. Oops. Yeah, probably less bad things to say than Bitcoin, because you can see here with this weekly close that put in the most recent high, the close was higher than the previous high. So that is, I guess, a bullish market structure break. So we can't really call this one bearish until we see it start to break down. So that would be looking to hold this region here, which it seems to be defending at the moment. So we'll see how that one plays out. So again, like if Bitcoin does hold in some meaningful way, maybe there is enough space for something like Ethereum to start to run as well, which has been holding its valuations quite well. Other ones we can check up Solana, which obviously everyone wants to know how that's going. So I've been tracking this one in a similar fashion, just in terms of a downward trend that had developed. So we had the series of the highest high, the first low, and the next subsequent high. So we can draw a trend channel off of that. Just wait for periods where price moves out of this channel and look to see how the market reacts. And we saw a positive reaction off this midpoint. So for me, that's saying the bulls are in control, at least from here onwards. But again, we're not seeing any subsequent moves higher. We're not seeing higher highs. We're not seeing a trending environment start to build. So it's really at its last legs for life support is how I would view this one before moving to the downside. And with something like Solana, sometimes you just have to zoom out and look at the whole picture. It's gone nothing but up for just over 100 days. Really. So, I mean, it's probably, as most people would want to say, due for a pullback and probably provide some pretty good re-entries. So if we look at like a monthly time frame, we can use something like Fibonacci just to measure, where could the move come back to. The 618 and the 786 is generally a golden pocket. And then we can start to look at what other structure lies around that area. And for me, it's these monthly highs. So, I mean, it feels like a lot of people would be in pain to see Solana back at $42.50. But, a lot of people might also look at that as one of the opportunities that they never got to get into Solana as well, since it's been on nothing but up mode. So we'll see how that one plays out. Obviously, quite a bit of time till that plays out. Another one's been obviously quite popular is Jupiter, with the very successful airdrop. Pushed Solana to the absolute limits in terms of transactions. But, it's been criticized for not being that great of an asset since launch, which, I mean, you could argue it's done nothing but bleed out. But yeah, I mean, this sort of behavior where you constantly are breaking the floor, making new lows, I mean, that doesn't really bode too well, specifically because we're not making any real significant highs either. Again, we've talked about the sweeping behavior already tonight. That's a cause of concern in terms of the bulls not really stepping in to hold it and take it higher. So from here, There's two potential scenarios on Jupiter for me right here. Just a sweep and a reclaim to at least try and move higher again, or this is a bearish move for the next move down. And there's nothing to say this one could move fast or quickly to the downside. It could just be a slow burn. We don't know till it happens, but overall for me, the trend is definitely looking like it's to the downside on Jupiter. Let's see what else we can check out. I know Tau's been a top performer in the last couple of days, even with the whole rest of the market being down. So, I mean, there's not too much you can really say about this one. Let's have a look at it on a weekly. It's a great sign of strength. Yeah, I mean, again, if we're just talking about what we were talking about earlier, this is a weekly time frame. Every time TAO has been clearing its previous high on weekly closes, it's just put in another green week. So I'd be watching to see this weekly close in 5 days' time. If we close below this red line, that could be the start of potentially a move down as well. But if there's a chance that Bitcoin does hold up in market right now, I'd be looking at this potentially as a re-entry zone as well. But yeah, look, this isn't really something I would be rushing into right now. It seems like a lot more risk than potential reward, unless something unexpected happens. And specifically with Bitcoin, really need to see that show some stabilization and some strength to really give some confidence to the investors to put altcoins back to the upside. So I hope that's been helpful. We'll be back again next week, if not sooner, to give an update, see how things are going. If you want, I guess, more real-time updates and insights on what's happening in the market, check out my Twitter, @pavhundel. And yeah, we'll be back again to do this all over again next week. Catch you later.